How are you guys doing? Welcome back. Today's February 22nd, 2022. It is 2/22/22, and it's Tuesday. What a dream. If you are brand new, welcome. This is By the Bulls Trading. My name's Evan, aka John Stonkton.
Pulls up, three-pointer. Bang! Bang!
Aka Chef Boyar Swing.
Hey, Mambo. Mambo Italia.
Aka Bruce Wingstein. All of our dumb edits put together. It's great to be here. Great to have you. If you are brand new, welcome. Today we're talking about 8 great picks going into this week you should have on your watch list. This is an educational watch list channel. I play only exclusively my plays. I don't actually trade all of these. That's way too many. And again, I think it's important for you to do your extra due diligence, extra research. I'm just here to show you some great opportunities for you. If you enjoy this content, you like this kind of video, make sure to check out my free course for you, 25 parts, all on my YouTube channel. Scrolling down below, hit that subscribe button, go back up to my little doofy little bull name, click that, and go check out the class. It's there for you. It talks about structure versus system, a thing that no one else talks about. I actually invented it from my own perspective because I actually have a teaching degree, unlike a lot of these phonies out here. And we talk about risk management, technical, fundamental, mental analysis, macro markets, goal setting, writing an actual trading plan, and consistency. Those 8 things allow me to be successful, and I teach that for free in my course. Go check it out. Secondly, if you truly enjoy my content, you want to support this channel further and get more goodies out of it, the Discord, Patreon's in the description box down below. Go check it out. 5 morning, 5 nightly newsletters, early video access, early call access, alert system, a bunch of great stuff. Go check it out. Admin team here to help you. Don't trade alone. And of course, 25 extra lessons on top of that can be all yours in the description box down below. Go check it out. If you don't want to, that's fine. It's no real big deal at all. Third is that I actually cannot compete with the large channels due to the algorithms, so I would appreciate if you do like this, a like, comment, and subscribe button to encourage you to scroll down that like button, that subscribe button, that comment button. I'm gonna make some real intense eye contact, awkward as all get out, and it's gonna encourage you to scroll on down and click those buttons to get off my big dumb face. With that being said, 5 seconds of terribly awkward eye contact so you go subscribe. Let's do this.
Prolonged eye contact. 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 Prolonged eye contact.
Thanks. So with that being said, 8 great picks today, all about the technical analysis. We got supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, stochastic, and the vortex indicator, all on screen, so you know what I'm talking about. With that being said, let's get into it. So first is AM, a gorgeous looking horizontal play, consistent higher lows across the board, and as of recently, making a nice support. Obviously, earnings has come. It's a massive overreaction. It's bouncing after hours just like the market is. And I think AM could be just a bit lower. Give me it closer to 911, 912, anywhere just a bit lower. It's a great play. Secondly, we have a nice resistance trend that's forming. That's a great breakout. If you do want to wait a while for this to kind of form and go for a breakout, you have that going for you as well. What I also enjoy is that we have the POC here. You want to watch my video about volume profile. The POC is the most gravitational node on this time frame. It drags us higher. It's where all the volume happens. Price wants to hit this once again. It is the strongest support and resistance, so it's not going to be good for us to hit it and go past it, but it will be a nice gravitational force on our side. Secondly, what's also great about this, we're moving on to indicators, is the simplicity. You'll notice a lot of my plays, we talk about convergence. To me, in the system that I developed myself, convergence is when supports, trends, and patterns come together in one point on the chart. You'll see in these uptrend plays, support and trend are together with the POC there. It's a really good setup. What we lose in convergence and real bullish momentum, we get back in simplicity. It's a simple support play. If it breaks $9, you just get out. If it holds $9 and goes up, you sell to when you're comfortable. So, you know, if only $9 being a strong support area, you break down below $9, you just get out. I mean, I wouldn't buy in here. You're risking 4 or 5%, but let's say 920 drops back down. Risk 2%, and you can hopefully make about 8 for your first small move, 4-1. It looks really good. With that being said, let's check our indicators. What's so cool about this channel is actually I don't scan with or use indicators for charting. What indicators show us is great insight into trend, momentum, volume, and volatility. That's it. That's all it shows us. And as you watch this channel more, you'll understand that technical analysis is your cake. Num, num, num. And the indicators are just going to be the icing. Ooh, strawberry. And so you don't want to rely on indicators that much, but it is important to have them and understand them correctly to, of course, execute a trade, exit a trade, plan a trade that plan off momentum, value, whatever it is. So if you are new to trading, you're going to see live what a veteran does, how I don't rely on them, but I use them as just a tool to help me enter a trade. With that being said, let's check it out together. So our blue line is the 10 EMA, the purple's 50, then the red's 200. You have our RSI, stochastic, and vortex, right? Can you play a 10 cross? Sure, you cross the 10 EMA line, a bunch of really good day trades and short-term trades over the 10. Over the 50, we're talking good long-term holds and good quick day trades in and out. Over the 200, really good looking day trades and longer term swings as well. Could you play a 10 cross tomorrow? Sure, it shows 2% life, 2.5% life tomorrow, like one of these bad boys. Sure, enter that, use the EMA line as a stop loss and try and go up to the 50, make about 2 or 3% pretty quickly, but I want to buy into value. What's important to note is that there's two main ways a beginner can enter a stock. Value, like the price is right or whatever it is, and you go, oh, that's a good value. Wow, what a deal. When the price drops, that's value. And then momentum is the second. It crosses an EMA line. It crosses a resistance. It crosses a volume threshold. Whatever you use, SMA, EMA, MA lines, whatever you enjoy for momentum, it crosses that threshold and goes, buy into that. I think the EMA crossover is not viable here, given risk versus reward. That's our foundation for all this. I think it's a good value. Value shown because of the TA. It's low. RSI is low at 36. Stochastic is low. Not really a divergence being formed here. I mean, I'm sure you could argue it's making some bullish ones, I guess. I don't think it's really there, but it's still low. Bulls are bottoming out in the vortex, which is a great momentum indicator in itself, where you could play across or when it bottoms out. See where the green bottoms out? It's there. See where the red tops off? It's there. AM is a great value purchase in my opinion. Sure, if it takes a week down here and kind of consolidating and then the EMAs come down, crossovers are fine. But for me, AM, given the market, given risk versus reward, it makes much more logical sense here to buy into value when you're comfortable and then go long. Either way, AM, watch listed, I do love what I see. Next is BRSP, another simple support play. It's important to note 888 was a strong one, and now we're kind of getting lower. I think BRSP, if it breaks down tomorrow, I'm not going to be upset. If it breaks down even farther off of earnings, look at the support at 820. Absolutely rock solid. This is going to be almost like an earnings casino bet royale thing here, and we're talking about dropping 5% in like a day here. I'm not super excited to enter until I see some life. I get, because how long does it take to usually consolidate and turn around? Our reversals take 8 days. This whole thing right here took about 22 days. This right here dropped down and came back up, took 17 days. This thing has long-term reversals. It's taking its time. I'm not going to rush in at all. If BRSP breaks down tomorrow, great. 825, 810, even as low as something like 790, we're getting in a good deal territory. Otherwise, it's just a simple support play. POC wants to pull us higher. We don't have that convergence aspect that we do for like I think it's HTH and ERJ have that. CBRE does too. It's just a simple support play. Let's check our indicators out. Wrong button, doofus. What's great is, again, we have value. You could play a 10 crossover, but again, giving up 3% here, you're risking close to maybe 2-3%, and then you may see 6. So again, 2 to 1 is not great, when in reality you could probably risk 2% here to make about 10, and 5 to 1 makes much more sense to me. So we have value due to the technical analysis. We have value because of the RSI. We have value on the stochastic, and we have value on the vortex, with bulls being low, bottoming out, and bears are high. BRSP has way more room to drop here, especially the markets are looking bad because of the Biden versus Russia versus Ukraine thing. There's no point rushing in. Get it? Haha, rushing in. So with that being said, BRSP, I think it's a fine one to watch. I want it lower. Let the red rain on us like Slayer, rain blood, haha. Let it come on down to us and play it in just a few days. But BRSP, I'd watch listed. I love what I see, just a bit lower. Next is CBRE, a really good play, a really nice uptrend. You can see we have one solid hit, 2, 3, 4, and on the resistance trend, 1, 2, 3, 4. I point that out because any one of you idiots, any one of me idiots, can draw a trend line from A to B. But to have a trend line like this from A, B, C, D, and hopefully E shows much more consistency. You'll notice a lot of FinTwit, they have like a trend line drawn from like 1 point to 2 points, and it never works out. 3, 4, 5 is what I'm talking about. So CBRE here, great trend. The POC is in fact the strongest. Oh no, Grilla, my cat cam. The POC is the strongest support on this time frame. It does want to be gravitational pull us down, but it is the strongest support. You have traditional support here as well. This is what I mean by convergence. This whole entire spot here has so much technical analysis strength that I think it's a really good looking play. I would definitely check it out for sure, especially if it does drop a bit more. We're talking, if it, let's say it drops to 98, risking 2% to make about 6 on a bad move, 10 on a good move. Great uptrend. Let's check our indicators for some clarity. When it comes to our momentum entries over our EMA lines, the 10's fine. You have plenty of good day trading and short-term swing trading over a 10 EMA crossover. The 50 is much better, and the 200, of course, is an absolute unit. So could you play any 3 here? Yeah, I mean, you can see we're pretty close. If we do have a move of about 1%, you get the 10. Maybe use this area where the bodies are as a stop loss. To see you cross the 50 and 200, use those lines as a stop loss. You're fine with that. Do we have value though? RSI's at 43. It makes sense. It's not the best value, but of course, if you go back like almost 4 months here, it's moved 0% and just going sideways, right? So for it to be in the middle, makes sense. It's just going sideways. Stochastic, there's no bullish divergence. That checks out. No bearish either. It's just a fine value at negative 35. And then bulls are low. They could be lower. And bears are high. They could be higher. So CBRE here has 2 options that you can go off of. And what both have in common is patience. That's the hardest thing for beginners, is to understand that boredom and FOMO destroy your account. Have patience, young Padawan. Firstly, with CBRE, I think the best value is 2% lower. If we see that, the stochastic should dip, RSI should dip, Vortex should dip to a great value. Or it shows some life, you cross a 10, 50, 200 EMA line, or whatever you choose, and you see some life on those indicators, and you can go long from there. So a momentum entry or a value entry, both are fine. Both work out just great. But it does come down to you having some patience. Either way, CBRE, I'd watchlist it. I do love what I see. Next is DCI, a really nice looking wedge down that again, I think you may need to have some patience on. A great support here, right? It's really good. 1, 2, 3 solid hits. It held up over here just fine, but it is lower highs. So I'm kind of worried about that, but it's a very low risk entry. Let's say tomorrow it kind of muddles around from $52.50 to $53, anywhere in here. You're risking 1, 2%. A bad move is already 3 to 1. A great move is almost a 6 to 1 overall. Wedge downs tend to break up. Wedge ups tend to break down. So this is a nice breakout pattern, wants to go up. The POC is gravitational, pulling us higher. Trends here, supports here. Below the volume profile line, it will get sporadic, it will get volatile, but it will be an overall pretty good deal. With that being said, let's check our indicators. When it comes to our indicators, a 10 cross is fine, right? You can cross the 10 here, 1% quick move, 2% quick move, good run here. You certainly can, right? Especially when you cross the 50, your best 10 run-ups happen then. While you're below the 10, I mean, it's fine. It's just okay at best. My cat just got in. Crazy how he did that. 10 cross is better. 50 is optimal. But anywhere down here, it's just a fine deal. Value, our side says it's fair. It makes sense. We're going sideways, right? Stochastic is low. That's good. No divergences. It all checks out. And then bulls and bears are pretty much tied. This does show a layer of consolidation you want to see with a breakout play. As the indicators kind of go sideways, as the price action goes sideways, that means a big move up or down, hence a stop loss, will be happening. So as DCI has a good chance of breaking out here, I love what I see. I would definitely watch this in. So here's ERJ, Embraer, sponsored. I'm known for my spelling and my Wordle skills. I can definitely read. ERJ, again, is a simple support play. I would be remiss not to mention 1350 being a support, but also this 1280 area is a even better support. Again, am I rushing in tomorrow? No, I'm going to let it do its thing and marinate. It's important to note the volume here is very strong at the $7 range. Right, had a big move up, consolidated, massive move up, and now we're kind of consolidating again. I'm sure that the volume here is low, below support. See how quick we dip into this? So again, you may want to be patient, let it come down 4 or 5%, dip into this range of this $13 range, and then buy for the support. The POC is not going to help us. There's no convergence. It's a simple support play like many today, which is important to note because if many are going sideways, it means a lot of uptrends have broken, and of course, keep that in consideration when you're making your purchases. Let's check the indicators. ERJ, 10 crosses are good. They're pretty good. You get a lot of 10 crosses. It really respects them. Like this right here is a great sign of the 10 EMA line being respected, and then when you cross it, it makes a nice move up. Now, of course, the 10 EMA line is almost 5% away. Look at that eyeball. Oh my God, I'm goated. About 5% away. I wouldn't wait for that. I'd buy into value, which we're getting. RSI is low. Stochastic is bottoming out completely. And the Vortex is bottoming out. Bears are overbought. ERJ can easily dip 5 to 6 more percent to be really, really good. I think right here it's just fine. It's a fine purchase. I think there's more steady, less risky positions, but you could also make in this kind of play 10, 15% off a good move. And a lot of folks want that. So ERJ, watch this. I do like what I see. I just want it a bit lower. Next is HTH, the same exact play. Not going to talk much about it as ERJ, but the POC is here. It's going to try and bring us higher. And of course, the risk is lower. I think this is a very strong support from 3080 to 3120. Anywhere in here is a strong support, even if it breaks down. You know, you do have $29.90, $30 here. Putting our max risk, you know, you probably put it 5% at most. A good move will give us a 2-to-1. Right? I would risk 2% on this, maybe 3% on this at most. Right? It breaks down, you know, down to 2%. I'm out. Can easily see 3-to-1, 4-to-1, 5-to-1 kind of moves here. Simple support play. I'm not going to talk much about it. It's a pretty easy play, but I do love what I see. When it comes to our crossovers, 10 crossovers again are fine. 50 is optimal, 200 is better. Could you wait for a 10 crossover? I'll give you that. I will give you a 10 crossover if you like to buy off momentum. Let's say tomorrow, price action does this, right? The 10 EMA line will probably look something like this. You could buy off of this, use the volume profile line as a stop loss, and you'd be just fine. 50 is too far away. I think we do have value. Firstly, the TA shows value. RSI shows value. Stochastic shows value. It's not a divergence. It all checks out. Lower lows, lower highs. Gap that wants to be filled here, just notice. That's really good. If y'all didn't know, with stocks, gaps like to be filled. So that's important to note. And then bulls are low, bears are high. Overall, HTH is a very simple support play. My cat wants to get back in. It looks really good. I think when it comes to convergence, we lose that, but it's a really good, easy, low risk, high reward kind of setup. HTH, I'd watch this. I do love what I see. Next is MCHP, a more popular microchip company. And again, when it comes to microchips, your due diligence is imperative given the market for them. But this again is a very simple support play. Would I buy here at 72? No, I want 69 and some change, or closer to 70. 68 is optimal, right? I want to see it dip. As we can see with earnings here and with dividend, it's moving up nicely. It's about 5% too high. If I see it 5% lower, I'd probably pull the trigger pretty easily. Let's check the indicators here. A 10 cross is happening. If you get that tomorrow, easy play. Crosses the 10, good move. Crosses the 10, good move. Crosses the 10, good move. But again, while you're below the 50 and the 200, your profits off a 10 cross will be limited. So again, you may get 2-3% off a day trade, but I'm not looking at optimal movement here below the 50 or 200. But again, RSI, it's fair. It makes sense. Going sideways, right? It's fair. Stochastic is low. That's really good, showing some life. If we do have continued life here, plenty of room to run up. Bulls are low, bears are high. MCHP here looks really good for a support play, about 5% lower. So if tomorrow's red and it looks bad, I'd start with MCHP and like AM to check out tomorrow. It looks really good. Overall, I definitely watch list it. I do love what I see. And lastly is NGL, a textbook ascending triangle that's forming. Again, we can see a move down. They said, all right, bulls said 137 is fair, and they sold it at 282. And they said, actually, 180 is fair, and they sold it at 280 again. And now we're back down here. As we get higher lows and consistent resistance, it shows bulls have all the power. Earnings, massive overreaction, dead cat bounce, right back down here. Again, we could risk 3-4% and still see an easy 4-1, 5-1 kind of odds for risk versus reward. A absolutely rock solid support that's bounced a bunch of times. This volume profile line has been rock solid. It looks fantastic. I would be nervous to see a possible head and shoulders form, right? This is what veterans see, right? I'd be nervous of this. It's not valid until it clears the neckline at 193. So if we do lose 193, 192, 191, I would become a bit nervous for that. But right here, earnings overreaction, great trend up, plenty of hits, strong support. I love what I see with the pattern. When it comes to our indicators, a 10 cross again is fine. I think that's too far away from me. I'm not going to wait 5% for that, but it's there if you want it. 50 cross is optimal. If you see the 50 cross beneath the 200, you may be in some trouble there. RSI's low. Stochastic's amazing value. Bulls are bottoming out. Bears are really high. NGL is finding rock bottom. You love to see it. I do like what I see. I think the ascending triangle aspect is very appealing. The support is very appealing. This overreaction from earnings is also very appealing. I do love what I see. I would definitely watch this. Thanks, y'all, for watching the full episode. It means the world to me. My cats were more active today. It really throws me off my game when I'm trying to record. My cats are like, meow, 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 and like scratching at the door. I'm always just like, can folks hear that? So I'm glad that you were here. Thank you so much. We'll see you guys tomorrow for another watch list. Again, your own due diligence, taking care of yourselves and your mentals and your chickens and all that means way more to me than YOLOing your money. So be safe out there. We'll see you guys next time.